Welcome back to Live to Learn USA. This is Doug Montezella, and today I want to save you money. The topic for today's discussion is tax loss harvesting. Who doesn't want to save money come tax day when Uncle Sam comes knocking on your door? This is a very effective way to do that. So I'm going to give two examples because I've done a lot of research on this topic, and there's nothing that's really clear and explicit and simple to really give a good description of what this actually is. So this is a money move you need to make by December 31st. And tax loss harvesting in a nutshell is government saving you money for realizing losses on investments. So let's get into two examples I have for us. Let's say person A, they realized $1,000. So all it means to realize is to actually sell your stock. That's all that means. To realize a gain or a loss means you actually made the transaction to sell. So this person made $1,000. Let's say they bought a stock at $1,000. It grew to $2,000. This is that gain right here. That same person also had another investment that lost $500, and they sold that off by December 31st of that year, 2017. If this person was in the 25% tax bracket, that means that this person would owe, and this was the short-term capital gains. I have another video that discusses short versus long-term capital gains, so if that's still fuzzy to you, go ahead and watch that. So that means this is short term, so they owe $250 on this $1,000 gain. But since they had a $500 loss, the way this works is you subtract $500 from your gain. So the government really only sees this gain as $500. And what does that mean? Now you're only going to be charged $125 in taxes because you split that bill in half. So now instead of paying $250, you're only going to walk away with paying $125 in taxes. Big savings. Okay, person B. Person B utilizes, well, could have, but this is a good time to maybe discuss a little strategy for investing. I've listened to a lot of different investors, and one key nugget that I pulled away is what people normally do is they hold on to their losers, hoping they're going to come back to life, and they sell their winners. Oh, I made 20% on this stock, I'm going to sell. This investor had the idea that your thought process needs to be the exact opposite. Why? Because you need to sell your losers. The name of the game with investing is limiting your risk. And you limit your risk by not taking big losses. So that's something to be super cognizant of. And if you have stocks that are performing well, companies have good performance, hold those investments. Don't be quick to sell and see your gains continue to grow. Don't settle for, hold on to your good performing stocks. Simple as that. And that's what this person did here. They may have had growth, but they didn't realize that growth because their money is still invested in that company. What they did is they sold off their losers. And this means that they had $5,000 of losses in their total portfolio. Okay, so this person doesn't have any capital gains to offset. So does this help them at all? Yes, it does. If you don't have any capital gains tax to offset that, what this is going to go towards is your actual income from your employer. Okay, so let's say that same person was in a 25% tax bracket. They could subtract up to $3,000 off of their gross salary, and that's equivalent to $750 come March. That's a big savings. Okay, and since that's capped at $3,000, what that means is the government allows you to actually carry over that $2,000 of remainder in losses to next year. So it's going to save you some money next year. So that's the benefit there, okay? And the last thing I'm going to touch on is just 30 days. You've probably been looking at that saying, what does that mean? For this to be valid, okay, for person A's stock to, okay, they sold it off by December 31st, but for this actually to stick and be valid come March, you can't buy that same investment. You have to wait 30 days because the government wants you to wait, and if you want to buy back in at that lower price, you got to wait 30 days. So if you want to buy back in, sell your stock, start your timer, wait for 30 days, and buy back in right after. So this is going to save you real tangible money come March, guys. So take advantage of this. The government's giving you free money. Make this move by December 31st. So hopefully you like my video. Subscribe to the link right here in the middle of your screen, as well as like and comment on my video to give me any tips you have for investing and share that knowledge. Thanks for tuning in, guys. Take care.